NMLS Exam Study Guide 800 Facts 2021. This one starts at 318. Under the HIPAA, borrowers can request a cancellation when it reaches 80%, which will usually be granted if they have a good payment history. HIPAA allows borrowers to accelerate the cancellation date by making additional payments that bring the LTV to 80%. Lenders may require evidence that the value of the property has not declined below its original value and that the property does not have a second mortgage, such as a home equity loan. The e-Sign Act allows electronic records and electronic signatures to be valid whenever a regulation requires a document to be in writing as long as the consumer has consented to use it. The e-Sign Act ensures the validity and legality of contracts and documents that are entered into by electronic methods. The e-Sign Act, a party to a contract, cannot be forced to use electronic signatures methods and may sign in ink, also called wet signatures. One party can use electronic signature method, while the other party to the contract can retain the rights to sign the documents personally, which would be considered a wet signature. The USA Patriot Act requires mortgage applicants to provide their name, address, social security number of employee identification number, and a government-issued photo ID. The USA Patriot Act increases the ability of law enforcement agencies to search telephones, email, medical, and financial records. The USA Patriot Act was created to prohibit money laundering and the financing of terrorist activities. The USA Patriot Act requires financial institutions to verify the identity of account holders, compare the account names to names in the federal database of fugitives and suspected terrorists, establish an anti-money laundering policy, and train employees on the policy. Mortgage acts and practices, advertising, that comes under Regulation N. Regulation N was issued by the Consumer Financial Protection Bureau in order to prohibit false or misleading advertising of mortgage products. MAP applies to any commercial communication designed to produce a sale or to create interest in mortgage products or services. It is illegal to misrepresent any loan terms or conditions in an advertisement. In general, Regulation N prohibits misleading claims by mortgage lenders concerning government affiliation, interest rates, fees, costs, payments associated with the loan, and the amount of cash or credit available to the consumer in any commercial communication. Copies of the commercial communication and supporting documents must be kept for 2 years. The HUD Equal Access Rule states that a lender cannot inquire about an applicant's sexual orientation or gender identity. Let's talk a little bit here about just general mortgage knowledge. General mortgage knowledge. The Federal National Mortgage Association, Fannie Mae, is known as Fannie Mae. Fannie Mae is the largest institutional buyer of conventional mortgages in the secondary mortgage market. The secondary market includes private investors or government agencies that buy or sell real estate mortgages. The Federal Home Loan Mortgage Corporation, Freddie Mac, was chartered by the federal government to buy mortgages that originate in savings and loans associations. The Government National Mortgage Association, or Ginnie Mae, is a wholly owned government corporation within the United States Department of Housing and Urban Development, HUD. Ginnie Mae does not buy or sell loans or issue mortgage-backed securities, MBSs. Ginnie Mae guarantees investors the timely payment of principal and interest on mortgage-backed securities that are backed by federally insured or guaranteed loans, mainly loans insured by the Federal Housing Administration, FHA, or guaranteed by the Department of Veterans Affairs, VA. Fannie Mae's automatic underwriting system is known as Desktop Underwriter, or DU. Freddie Mac's automated underwriting system is known as Freddie Mac's Loan Product Advisory. It was formerly just called Loan Prospector, or LP. The 2020 maximum conforming loan limit was raised to $510,400, up from 2019's level of $484,350. Fannie Mae requires only a 7-year history to be reviewed for all credit and public record information. A conventional mortgage requires a minimum 3% down payment for first-time home buyers. Generally, the minimum is 5% down payment. A conventional mortgage is not insured or guaranteed by the government. A conventional mortgage requires private mortgage insurance on loans with less than a 20% down payment. Private mortgage insurance, a policy that allows lenders to recover part of loss in the event of a borrower's default or loss in collateral value. Most conventional mortgages are not assumable. They do have a due on sale clause. A conventional mortgage that has a 5% late fee of the P&I amount only. Government loans, FHA, VA, USDA, they have a 4% late fee of the P&I amount only. The down payment amount on a conventional conforming loan, it could vary. However, on a conventional loan, 5% of the down payment must come from the borrower's own funds. FHA insured loans require 3.5% down payment, and it can be a gift. VA and USDA guaranteed loans do not require a payment. A jumbo loan exceeds Fannie Freddie maximum loan amount. They're also called non-conforming loans, P&I debt service is the monthly principal and interest payment. Late fees are either 4% or 5% of the debt service, not the PITI. Escrow impounds are usually collected by the lender as part of the monthly mortgage payment. They include the monthly amount for property taxes, hazard insurance, and flood insurance if required. PITI is principal, interest, taxes, and insurance. Hazard, flood, and mortgage insurance is included in that. It is also called the monthly housing expense. Fannie Mae requires the non-qualifying spouse to sign the mortgage or any other documentation required to evidence that the spouse is relinquishing all rights to the property. The maximum term for a Fannie Mae loan is 30 years. Fannie Mae is the largest institutional investor in the secondary mortgage market. It purchases FHA, VA, conventional loans from commercial banks. Fannie Mae requires guaranteed funds such as a cashier's check from a bank or reputable financial institution to pay for the closing costs. Personal checks are not acceptable. Fannie Mae emphasizes the borrower's continuity of stable income versus stable employment.